Welcome back. This is going to be part 2 of the Sierra Homework accounting cycle problem. So in this part, what we're going to do is create a income statement up to the point of income before taxes in order to do our income tax expense journal entry. Now, I've been running this clock to demonstrate how this can be done easily in 30 minutes, less than 30 minutes. I am talking and explaining while the clock is running. However, before I restart the clock and we do this, I do want to explain one thing that you should have noticed or will be helpful to notice about this worksheet. So one of the real strengths of this worksheet is that it's ordered in the way you're going to create the balance sheet and the income statement. So right up here, you have cash, accounts receivable, allowance for bad debts. Even though it's a credit, it's a contra asset, so it's classified with the assets. Inventory, other current assets, property, plant, and equipment. Accumulated depreciation. Accumulated depreciation, once again, is a contra asset. So even though it has a normal credit balance, it's classified with the assets, because this $80,000 is the historical cost of the property, plant, and equipment, and the $17,000 is the total depreciation recognized to date on that asset. Net those out together, so $80,000 less the $17,000. That's the carrying value of the property, plant, and equipment. For the accounts receivable, $6,000 less the $300. We call that accounts receivable net. So $5,700 is what you would expect to collect. In other words, even though your customers owe you $6,000, you expect $300 of that not to be paid. And that's the way it goes. And in business, half of business is just collecting your debts. Okay, and then we go down further. We have accounts payable, income tax payable, unearned service revenue. Excuse me, is not a revenue account. It's revenue. It's not revenue yet. It's a liability. It's you got paid from the customer and you still have to say provide a magazine subscription. You got paid for insurance premiums, but you still have to provide the insurance. Okay. Interest payable, salary payable, long-term note payable. So these are all the liabilities. Okay. And then you get to common stock par, additional paid-in capital, retained earnings. These are the stockholders' equity components. Dividends is a temporary account that will be closed to retain earnings. We have revenue, and then we'll have all the expenses. So this organization really makes your life a lot easier. In particular, what we need for income tax expense adjusting journal entry is we're going to take all these components, the revenues and expenses other than income tax expense, to create the income before taxes. Okay, so I am not quite sure why this thing is here, so I'm going to delete that. All right, so I'm going to go start the clock, and we will continue working on the problem. Ready, set, go. All right, so looking at the journal entry, again, we have 40% tax rate, and it says we want to calculate income before taxes, or income tax expense and income tax payable. Again, an adjusting journal entry has a revenue or expense and then a balance sheet account. So we have an expense account and then we have a liability. All right, so let's get back to the adjusted trial balance, and we have to go to the income statement. Now, I've already put in service revenue, cost of goods sold, gross profit is the difference. So all I am going to do, you could type it in, but life's a lot easier with Excel. Go to selling, general, and administrative expense. What? There is no selling, general, administrative expense. Oh, selling, general, administrative expense is the sum of bad debt, depreciation, and salary and other. Okay, so let me start over. We have bad debt, depreciation, so equals bad debt expense plus depreciation. Oop. I should have been over here. Let me start all over. Equals, it's the same number, but you're using the adjusted trial balance, so it's really better to be consistent in the same column. So bad debt expense plus depreciation expense plus salary expense plus other. Okay, enter. All right, operating income is the difference between those two. Okay, interest expense. And we go over here, interest expense, bam, 3667. Income before taxes is the operating income minus the interest expense. And why do we separate these out? I'm even spending time explaining the why here. So cost of goods sold for a retailer, very, very important. Here's your gross profit. If your gross profit can't cover everything below, your business is no good, okay? So this gross profit is your source of income that's going to provide for the entire rest of the operation. Selling general administrative expenses, those are like executive salaries, lawyer fees, legal fees, blah, 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 all that stuff. And then the interest expense, it's separated out because the investors want to know, what are you paying for your debt financing? That's a very important item to be separated out, okay? So now we have income before taxes of 7233 and a tax rate of 40%. So let me go to my worksheet or my note area, my scrap paper here. What was that, 72? I already forgot. I got old man brain here. Times 40% equals 7233.4 times is 2893. Again, we only go to the dollar in financial accounting. Those pennies, other people can worry about it. 2893. Back to my journal. 2893, and I can just say equals. Great. All right, and we do our adjustment. Income tax expense equals 2893. Enter. And remember, for in the world, for every debit, there is an equal and opposite credit. So we do that, and then we have to remember, boy, I am so nice. I'm such a nice guy. I put these highlights here. I love that. Okay, and my balance is balancing. You want to check that? Okay, I know you're going to be stressed out, but this helps you. If they don't balance, in all likelihood, you forgot to put in a debit for the credit or a credit for the debit, okay? Or you forgot to, sum across. All right, I am not going to put the sums in there for you. That's part of you demonstrating your understanding of the worksheet. So in this part, very short video, just the income tax expense adjusting entry. In the last part, we're going to get through all the financial statements lickety split.